Hi, everybody. Thanks for joining us, and thanks to our speakers. I'm very happy to see
everybody.
Thanks. Familiar faces which we met at Blockchain Economic Forum. Today we can meet online without flying, and I think it's an even greater opportunity to share insights and get connected with entrepreneurs, with investors, and help each other to find new ideas, to pivot, to create new business models and find investors. I suggest we start from quick review of coronavirus news and insights and its impact to the venture industry, to particular business models, particular sectors, and also discuss what kind of business models can be growing during this new situation. Let me give an example. So just 2 days ago, I had a discussion with one of the top experts from King's College of London, from their energy security center regarding oil market situation. And the feedback here is that the decline is in oil demand is something like 30 million barrels per day. So it's 30% in March, when China imposed their quarantine. In April, US and many European countries expanded quarantine, and this could result in up to 50 million barrels per day decline in demand. And oil countries, they are not able easily to cut their production. OPEC deals to cut production are about something 4 to 8 million barrels per day, but Saudi Arabia, for example, do not have incentives to follow this, as they just lose market share, lose revenues, while they do not fix the price issue. So they have incentives to produce even more. And this means that there could be oversupply of 50 million barrels per day. And this means that spare oil storage capacity, which could be something like 500 million barrels. So it could be filled in a few weeks. And this means that there's oil which is, and there is no space to hold it, which could result in fire sale from oil traders. However, on the other side, there is a US federal stimulus package, including $2 trillion, which can be used to buy oils, and they can put this oil into all the mining space. So, and this could be a factor which prevent oil from collapse to $10 or something like this. So the takeaway for startups is that there could be some ideas about oil storage, about oil products reselling, or especially for traders who have excessive capacity of oil on their hand. Guys, I suggest you also share some of your insights of your recent findings, and make your statements how it could be used by startups, by founders to pivot and to find investors. Who wants to start?
I'll go.
Okay,
Who else said they'd go? Let the professor go.
He can go first.
Thank you. So my name is Harjoat Bhamra. I'm a professor at Imperial College Business School. I'm basically an economist. I'm also a co-founder and advisor at AdviceBridge, which is a personalized low-cost financial advice platform. So I think I guess we're here to discuss the impact of the coronavirus on investing. And I guess I'd like to frame my thoughts about, I guess, public and private investments. Because generally investors who hold private investments will also have public investments, but often not vice versa. So I think we've all seen the decline in stock market valuations in public investments, and that has an immediate impact because people are going to become more prudent about how they invest going forward. And that, I think, means for startups that ideas have to be very good and compelling for you to obtain significant amounts of funding. And in terms of the impact of the COVID-19, the impact is obviously different across sectors. Travel and leisure will be hit particularly hard. We see that already in asset prices, but other sectors will hold up well. So food and medicine, clearly, and personal goods, and also medicine and biotech research. Now, in terms of new ideas, so even though the world is going through a terrible time now, we still need to connect with each other. So basically, we are testing virtual technology at an accelerated pace. And you certainly see that in the education sector where I work. So we are being forced basically to develop courses for now and then also for September in case we're still like this. So we are basically piloting new ways of basically teaching people, and we're getting used to technologies which previously we kind of knew were there, but we didn't have to use them. So people, yeah. And I think that, yes. So I think that, I think in terms of educational technology and edtech, there are going to be lots of opportunities going forward, especially for people who can meet the needs of big brand name universities.
My turn?
Yeah.
So I think that unfortunately, people confuse means and ends. So when people speculate, they want to make money. They want whatever they bought to go up in price. The only reason anyone buys any stock, for the most part, is because they want to sell it at a higher price at some point. So every stock gets sold for the same reason, but they get bought, to sell one day. For some reason, people think they conflate, they misunderstand causality, that the oil price going down caused the market to crash. And it's not the case. It's not the case at all. The market would have crashed from any type of pause or impetus in any one of the numerous bubbles that currently exist. We have a bubble in student loans. We have a bubble in house prices. We have a bubble in asset prices. We have a bubble in everything. It's an everything bubble. It only took one of these industries to have a hiccup, and we had all of the industries have a hiccup at the same time. Cheap oil is good for the world. It's good for everyone except oil producing countries and oil producers themselves, which some people have domestically. Those people getting screwed and having less income is vastly superior for everyone else in the economy, because the vast majority of participants in the economy use that commodity and it's an expense to them. And the higher and more expensive that thing is, all it does is shift the economic resources of the majority of participants in the economy into countries that, for the most part, don't have good human rights records and aren't doing wonderful things with the money. So cheap oil is better for the world, and those guys can get nuked, and it will be better for all the other participants of the economy. And it saddens me to see that somehow people think that, their house is their savings account, and that everything in the world has to drive their house price up so that no student will ever be able to afford a home ever. And it's disgusting. And it's not the way the world is supposed to work. When you get out of high school, you should have some chance of being able to own a home one day. And when everyone treats their houses like a roulette wheel, a speculative thing, it distorts the prices where kids will never be able to get a home ever. And so cheap oil is good. Cheap houses are good. And, we should speculate on things that make the world better. And high house prices and high oil prices doesn't make the world better for anyone, except perhaps the worst nations available.
House prices and high oil prices doesn't.
Thank you. That was just my insight about oil prices. So you can have more relevant insights, recent insights for venture industry, for startups.
I can say that a lot of people are going to try and pivot into something that's a short-term situation. We're going to be dealing with COVID for maybe a year, maybe a year and a half. Should have a vaccine, or we should have enough people with antibodies to have herd immunity once we reach 70% of people that are, relatively immune to it. And that we can all have our driver's license or cell phone apps or facial recognition that says, hey, this person is likely immune because their body has their blood has the antibodies. Therefore, you can work with other people that are immune and have green zones. I don't think it's smart to pivot. I mean, if you have a business, it takes time to execute. So if you have an idea now, it's going to be 2 years before your idea is actually in the real world for the most part. So for you to pivot for some situation that only exists for a year and a year and a half, the people that are really going to do well in that environment are the people that were already ready a year ago. The people that are these late movers that are just now trying to pivot into doing mobile things, they're going to get whipsawed when the situation is just different in a year. And then they're left with a product that no one needs and is better served by the guys that got it a year earlier head start.
Thank you. Guys, who is ready to share some of your views?
I'll go for it, Valentin. So look, I mean, we were just commenting before we started that the amount of deal flow, both on the buy and sell side, is significant at the moment. So what are the things that are happening because of the situation we're in? Well, there's a few things going on that I see. The first thing is, you have founders coming with new projects looking for capital. But at the same time, the value of other things, and there's a lot of distressed assets that are on the horizon that are also going to come on the radar of investors. So you've got the new, and I think Richard's right. I mean, if you're not a long way down the runway and able to demonstrate to the investment community that you're ready for liftoff, then it's going to take some time. So distressed assets is something to consider. The second thing really is that, can you do deals online? Can you do deals on Zoom? Because a lot of the investment community, they work on the basis of wanting to meet the founders, to look them in the eye, to see their energy, to get to know them is quite a fundamental part of investors parting with their capital. So that's an interesting thing to ponder. If you think at Sean Park, for example, Artemis is one of the biggest fintech investors. He is doing some very small stuff on Zoom, and he's closing the deals, on virtually. So that's interesting. One of the other speakers talked about filling the gaps. Well, I deal with the family offices as well as the tech funds, and on the family side of things, it's sustainability, massive shortages of both not only medical but also water, food. These are the projects that are getting the families to get their checkbooks out. For the tech funds, I think you're going to see it harder for pre-seed to get their capital unless they know the tech funds in some fashion. And I think a lot of the tech funds will shift away from maybe early stage to more Series A. But then Series A is quite hard to raise at the moment. So I think we're going to see a shift as investors come to terms with not being able to meet the founders, and but they still want to spend the time doing the due diligence, looking at the business model. And the last observation I would say is that make sure valuations are sensible. So if you're pre-revenue, you've got a great idea, valuations are coming down. And the second thing is make sure in your business model, you have enough runway to get into the middle of next year, because this is going to be around for 12 months or more.
Thank you. Tony, what's your take? Tony, please switch microphone. It's on the left side.
Sorry, I was so eager to start talking, I forgot to put myself off mute. But I deal with investors and I also deal with projects, and I see it as an opportunity in some respect. We've taken a lot of these projects that are half funded or half done, and we're actually merging them or asset stripping them and putting them together. I believe the market has been too buoyant and too well. There had to be a crash to actually redo this. I'm not taking any seriousness of the COVID out of it, but this has happened. We're talking about investment and the opportunity here. I believe the opportunity now is to look at, people need to look at the long term and actually bring revenue opposed to high valuations. I'm based out in Asia, and they are very traditional in their approach. And as Nick was saying, and everybody is more ready now to start doing deals online opposed to in person. People are either adapting or they understand they're not getting any opportunities, or they're not doing anything. So I can see that the family offices is actually, and also the high net worths are changing their ways of investing to the current climates. In Asia, doing deals on Zoom or anything like that has been a very rare occurrence, but people are adapting. So I believe we're going into a very interesting investors, and also from a company point of view, people have to adapt. Everything's changed in the last 6 weeks, so people need to adapt to it as well.
Yeah, so you say change in 6 months, and what about next 6 months? So is it there will be new change, or we will live in the new reality?
I think people need to have the mindset that we're in a fluid situation at the moment, okay? And people need to preserve, protect, to fight the other day. People can't look at long-term stuff as they used to 6 months ago, where they used to spend capital or invest capital in that sense. But they need to look at the short term to be able to look at the long term. I think the definition of time and horizon and returns has changed quite dramatically at the moment.
Yeah, thank you. Who is next, guys? Ryne, what's your take? Nick, are you there?
Yeah, I'm here. I've had a go, Valentine. Do you want to let somebody else have a go?
Yeah. So I'm checking who is online. So, guys, please don't be shy. Switch on microphone and contribute.
If you run out of speakers, man, I'll talk your ear off.
Can y'all hear me?
Yes.
Okay, perfect. I'm Emilia Gonzalez. I am an early stage investor for Social Starts and Joyance. We invest in the science of health and happiness. I think we're the 4th most active seed stage investor globally. So that's a bit of the background. In terms of what we're seeing in real life, I mean, we're seeing a couple of things. One, the biotech industry is as strong as ever. 3 of the biggest biotech funds recently announced raises over $1 billion, both in the US and in China. Another thing that we're seeing a lot is mental health crises are beginning to emerge due to the increased isolation that you're seeing in people. And so that may lead to even more deaths in Corona. And so solutions that are working to combat depression, anxiety, whatever, dealing with mental health, have a tremendous amount of potential in that space. In terms of startups that we're looking into, we are expecting we invest mainly in seed and A, to have at least 12 months of runway. We don't know how long this is going to take. We're expecting this to take a lot longer than people anticipate. And so that's something that is a minimum requirement for our Center for Investments. In terms of moving digitally, we are still moving. Prior to Corona, we were making about an investment a week. After nowadays about half of that investment every other week, of which we know we don't require in-person meetings anymore. We've moved entirely digitally. So Zoom has been a big friend of ours. And so that's kind of another thing to note. What else can I think of? No, and I mean, I think we're still active. We're still investing. We have seen a couple of deals fall through because a couple of funds are unaware, are concerned about what the repercussions are going to be, how long this is going to last for. However, I've seen in investing kind of in the real deep tech, deep science companies, exactly, no more Me Too therapies, no more Me Too startups, but companies that are working on something that's truly novel, revolutionary, and transformative are the kinds of companies that we think are going to prosper as much as possible.
So Amy, as I understand, your fund is still active.
Correct.
So when did you make your last investment?
Personally, I closed the last investment about 10 days ago. The fund closed a deal last week.
So, and what was this business model about?
It's all biotech. So
Biotech.
It's companies working on deep science. They have tremendous IP, very valuable IP, have at least 12 months of runway, and have just something that's novel.
So, did you refocus your fund into biotech startups, or it was your focus for a long time ago?
Personally, that's been my focus. I've been focusing for the fund. I focus on all the life science companies, so healthcare, biotech, life sciences, digital health, etc. However, a lot of our consumer-facing products, which a lot of other partners work with, are a little bit on pause. And so, again, I think we're shifting the focus of the fund now to just deeper science, deeper tech kinds of companies, at least for now, until all this with Corona surpasses a little bit.
What changed in your investment process? You mentioned that you conduct meetings online, maybe some other things.
Yeah, I mean, I think the minimum cash requirement, something that's new. The investing speed has also changed a little bit. I mean, that's pretty much it. And then just us focusing all online digitally. Another thing.
These last transactions, did you do due diligence in traditional way? Did you meet the funders in person? So is it the kind of still or traditional way of investing, or you completely changed the process to adopt this to remote communication with founders?
Yeah, and I think that's something that the fund right now is trying to figure out, what way are we going to move forward, right? Is it okay not to invest in a company without meeting them ever in person? I think that's something that we've been really focused on, is that for us, the in-person meetings are critical. You get so much insight and information just by meeting someone in person, right? The way that they act, the way that they sit, the way that they, these micro expressions that you can see, that you get to learn and master, are really important. And so that's something I think that the fund right now is grappling with, how do we move on forward? Can we make investments that are only digitally? Is that okay? Do we make a couple exceptions? Or how are we going to go about this situation? I think that's something that it's evolving and continuing conversation.
What changed in deal sourcing? Do you receive projects from traditional channels, or you get new channels such as online platforms, or
just everything that we've done in the past, we're going to continue doing in the future. So referrals. We have an own internal based system that we developed in-house that, we can find really great technology, referrals, inbound. We serve a ton of inbound. And so I think there's different sources, and they're also kind of maintaining the same.
Thank you.
Absolutely.
Can I remind everybody that just because we're having a pandemic right now, all the life sciences are the most important thing in the universe. Human consciousness is the rarest thing that exists in the universe. The meat is what matters. Our existence generated meaning. We need somebody to work on the meat. F1 racing, the machines could do it better. They restrict the throttle bodies. They restrict the aerodynamics. We could take all those engineers that are just making cars slightly faster and put them on saving human lives, right? I mean, obviously it would be voluntary, but if you pay these guys better, you're going to get better health outcomes. The fact that this pandemic blindsided us and the only guy out there in the public using his social capital to try and prevent it was Bill Gates, who's demonized by half the world, which just is insane to me. You know, everyone has gotten a wake-up call that they will soon forget. Everything will go back to normal in 2 years. And it's like biotech is the most important thing in the world. You will need that medicine. Steve Jobs is dead now, and he didn't do barely anything to prevent that from happening. And he knew it was very likely to happen. Everyone on this call is 40% likely to die of heart disease, 40% likely to die of cancer. You're not going to die with a bang for the most part. You're going to die with a whimper. And you have a chance to fight and fund biotech startups like perhaps the ones that she's working with. And the life you save might be your own, and you still get rich. But the thing that you build through getting rich might save your life.
Okay, thank you. Darwin, what's your take?
Hey guys, sorry that I'm late. So I just want to kind of chime in. So I'm based in California. A little bit background, I'm the general partner, founder of a Good AI Capital. We focus on early stage AI companies, specifically for healthcare, fintech, and B2B SaaS. So we also have what we call a mission-driven investment thesis. We invest in we believe if you start by doing good, you end up doing really well. So this is our mission. We launched the fund last year. Now I think it's actually becoming a very relevant. Our investment thesis are becoming very relevant. So we invest in deep biotech, healthcare companies. Particularly, there's an area called synthetic biology, which is the idea where you can actually program living cells, doing reading, writing, and editing of cells. Basically, it's an emerging field that take advantage of DNA sequencing, as well as the sort of the explosion of AI technologies that apply to transformative therapeutics, such as cell gene therapies. So like the previous speakers that was talking about where the idea where we're not seeing downturn, particularly because of our focus. We focus on the technology that actually, or entrepreneurs that have a deep desire to use technologies and AI to drive the changes. And this is at the pandemic that actually is really kind of putting our investment or, our thesis on focus front and center. So we are a 70 million fund. So one of the things that one of the previous speakers, Emmy, mentioned that they were just recently closed the fund. We actually also recently closed our fund. In fact, actually one of the LPs that we discussed, actually I never met in person. So we closed the deal with 2 Zoom calls. I think it's just kind of put the idea where there used to be a certain way of doing business before, where there's no way people are giving you millions of dollars without actually even seeing you. But now, because of the idea where this context that we're living in, once your thesis is clear, you have a track record, you have a kind of like the substance that everybody were looking for. I think people will really buy into that, and they resonate very well with our mission. We're here to save lives. So this is actually something that it's very, very relevant to people's idea. And also, we also just invest in the companies just couple weeks ago. Also, it's in the microbiome space. So microbiome, for those who are not familiar, is the idea of using your gut bacteria. Particularly, this company is using the microbiome technology to do a oncology or cancer prediction via there's a fecal matter. Basically, is your fecal from the patients that potentially have different microbiome indexes that allows you to detect the presence of cancers or do a better job in predicting that. So it's not exactly focusing on the vaccine or the COVID-19, but that could be actually potentially also can be used for the application towards some of these vaccine or drug therapies that are relevant. So so we never anticipated that, but actually this is actually all that investments are. A lot of our portfolio companies actually are also pivoting, not necessarily pivoting, but they're actually focusing on some of the existing IP that they have, and then apply towards some of the COVID-19 applications, whether it's testing, whether it's looking at new vaccines or potential new drugs. They're all working towards that. So in fact, actually, we see our business are thriving right now, really. So due to this particular context that we're in. So but I thought I just want to speak briefly because I resonate very well with what Emily just mentioned.
Thank you. Thank you. Ryne, would you contribute? Oh.
We don't have Ryne here.
Okay. Okay.
So I just wanted to add a few comments, if that's okay, Valentin, relating, I guess, ideas behind why we think life sciences are important, but also the car industry, which Richard mentioned. So I guess I think we probably all noticed that those of us who live in big cities, so I'm in London, is that the air seems a lot cleaner now because people are not out there driving their cars, right? And there's a lot of research going on about the impact of air quality or lack thereof on health. So poor air quality can lead to inflammation, and there's research suggesting that this kind of inflammations are closely linked to cancer development. So if we could have more work, so life sciences are important, but the car industry is not unimportant. If we could have a shift to cleaner methods of transport, alternatives to kind of gas guzzling machines, that might help us actually prevent some of the cancers that unfortunately many of us will develop. So I wanted to mention that, because I think that's an insight that we've gained, and I think we knew that, but now we can actually breathe the reality of that.
By the way, Imperial College is now famous with the report of the Ferguson group, which projected quarantine for something like 6 months. So, and so their estimation is that there should be half of population experienced coronavirus. And could you add some, if you know, is there any updates to their report?
So I mean, their report is basically, it's always changing what they're doing, because as they get more data, they're going to feed that into their model. And also that the model itself is that they are working on it. So I know that the leader of the team, Neil Ferguson, actually was ill with coronavirus and probably just recovered. So, I'd mention that. So I'd also mention that there are other researchers who have differing views about how to deal with coronavirus. So it's not a settled scientific fact that we should basically all be kind of isolated in our homes, and that's the only way to deal with this. But it is, from a health perspective, clearly a safe way to deal with it. But in terms of the economy, it has risks, because it's hard for us to go about how many of our business, the economy slows down. It doesn't grind to halt completely, but slows down. So it is interesting. I think that the work that Neil Ferguson is very sensible. I guess, like many people, I only wish that we could have paid more attention to it earlier. And I'd also mention the work that other departments at Imperial are doing. So people in finance or economics are thinking about the problem about when is it optimal to reopen the economy. We're also trying to get measures of how the economy is being affected, because if you think about what the Chancellor in the UK is doing, he wants to provide essentially funding for businesses, but which businesses? And we don't have data on sector-wide output that's updated in real time, but we do have data on asset prices, and we're trying to figure out ways to use valuations to figure out which parts of the economy are most heavily affected. So Imperial are doing lots of things, not just on the life sciences front and epidemiology, but also on wider issues related to the economy.
What is their last death rate estimation for COVID? 90.
I don't know what their last death rate estimation is. I do know the figures for the UK on a daily basis. I think they're approaching 1,000. And I think in terms of I think one of the scientific advisors in the UK unfortunately said that the UK may end up being one of the most affected countries in Europe by coronavirus. So another point I would make is that there's a professor at Stanford who said that clearly the number of infected cases can't grow exponentially forever, because eventually you're eventually going to run out of people to be infected. So at some point it has to flatten out. And I think all these models are very sensitive. So if you change the data in the model, your estimate of when the flattening is going to occur is going to change. And I think in terms of the modeling perspective, what we need is a better way of dealing with estimation error when it comes to looking at the outputs of these models.
Yeah, I think this number is important to estimate.
I have that number for you if you want it.
Yes, please.
So Neil Ferguson's last update as of April 5th, just about 8 days ago, was there'd be about 7,000 to 20,000 deaths in the UK. And I think part of the reason the UK will tend to get hit harder, and if you overrun your emergency rooms, then people die a lot more, and from all causes, because it doesn't matter how you got there, whether it was car accident or COVID. When there's no beds left, you're not going to get treatment. So the number of ICU beds per capita is 5 times higher in Germany than it is in the UK. So they have the ability to withstand a 5 times higher rate of horror than the UK does. So the thing that you see in the media right now, that Neil Ferguson has had to basically rebuke all these people that are misquoting him. They get angry when he said that 500,000 people would die. And now he says that 7,000 to 20,000 will die. And they say that his model's bad, but they're stupid people. In reality, people took his advice and it's reflexive. So his advice was that we should do social distancing. And they gave up on the herd immunity idea and went to social distancing. And that was effective. And the more effective social distancing is, and the more effective the people in charge are, the louder the stupid people get saying that we didn't need to do anything, because they're taking credit, making the virus look weak, because all the hospitals aren't overflowing everywhere yet. And they're using the good things that the smart people are doing, enforcing social distancing and lockdown. And then they're mutating that to mean that we never needed the lockdown at all, because look, it's not that bad. They don't realize that it's not that bad because of the lockdown. The virus is very deadly. It's 10 times more deadly than the flu for young people. For a young person, your chance of dying in your 20s is 0.01%. With COVID, as a young person in your 20s, your chance of dying, your case fatality rate is 10 times higher. It's 1%. And if you're an older person, I mean, here's the other thing that's misleading. People just talk about the death rate, and that's the only thing they care about. Boris Johnson, he's not dead, but did he look like he's having fun in the emergency room? I don't know about you, but death doesn't bother me that much, but being in the emergency room does. So I care a lot more about am I going to have loss of lung function for the rest of my life? And am I going to have a horrible time in the emergency room with a tube stuffed down my throat and being put in a medical induced coma, right? People don't realize how bad this really is, even when you don't die.
Okay, fortunately, venture funds are investing in biotech. Amy, thanks for this insights, and all of you guys. That was a very insightful discussion. I encourage you to participate more in this online panels and also in startup pitch competitions. Elena is running this competition. I'm passing a word to you, Elena. Please go ahead. Thank you.
Thank you very much. So now we are going to our pitch competition. I kindly ask all our judges to open your evaluation forms. And our first project for today is Richard Hearth from Hex. Richard,
hello.
you have 5 minutes. Hello.
Hi, everybody. It's going to be unfair. A lot of people are going to sell you on a lot of dreams, and that's what we saw in 2017. Everyone had a nice dream, and then they all failed. 99%, 99.9% of them all failed, lost everyone's money. And so everyone felt very, very rich when the prices went very high with illiquid markets they couldn't sell into. And then the prices all went to zero and they have their bags and they hold their bags and they're sad about it. That's the majority of startups. Most startups fail. Hex isn't a startup. It's number 65 market cap right now at 72 million. I think it might be 63 today. We've gone up 11x in price versus Bitcoin over the last 90 days. We're up 10x versus fiat and 9x versus Ethereum. You can see these stats yourself on hexinfo.io, or you can look at the chart on uniswap.hex.vision, or you can go to CoinMarketCap, or coinpaprika.com is better than CoinMarketCap. CoinMarketCap has some weird rules on what needs to happen in order for you to be on the front page. So if their rules weren't weird, requiring certain central exchanges, then we'd already be like number 60 something on the front of CoinMarketCap. And we launched 4 months ago. We launched on December 3rd of 2019. So it's absolutely amazing. People are building on top of it. We've got numerous gambling games and other things that people are building on top of it. And it's decentralized finance. So it's the world's first blockchain CD. In Bitcoin, you can hold it and that's all you can do. And if you hold it, you don't get any more. And if you want to get interest on your Bitcoin, like you would in a bank, you have to do the opposite of what crypto was invented for and expose yourself to counterparty risk with someone that may lose your money, may not give it back to you, which has happened time and time again in cryptocurrency. Cryptocurrency was invented to get rid of middlemen. And then because people are seeking yield, they give their coins to the exchange and the exchange loses them or makes you beg for your own money back. Oh, here's a selfie. Can I please have my money back? Hex solves all of that, all of it. So with Hex, you lock up your coins. You choose how long you want to lock for. You can do it from a day to 5,555 days, up to you. The longer you lock, the more you get paid, just like the real world, just like the time deposit at your bank, which is probably the most popular product at your bank. There's $5.2 trillion in time deposits in the United States and China. That's more than there is printed money. Hex addresses a larger market than Bitcoin does and is more secure and has faster transactions. Bitcoin has 0 audits and has had to roll back the chain once because someone printed out 6 billion coins out of thin air in 2010 and just narrowly avoided having to roll back the chain again because a Bitcoin Cash developer discovered a vulnerability that would have allowed anyone to print as many coins as they want about 1.5 years ago. There's no audits in Bitcoin. Hex has 2 security audits and 1 economics audit. And we've had 100% uptime when everyone else was getting wrecked during the 60 and 70% drop that we just had a couple weeks ago. Hex price went up. Hex price went up when everyone else's price went down with 100% uptime. It's amazing. Like it trustless, decentralized, no off switch, no counterparty risk, and on-chain exchange with $4 million of bid support. So you want liquidity, you want out, you can sell instantly with no counterparty risk, no sign up, no AML, no KYC. You go to hexdex.win and test how thick the order book is. You can put 1 Ethereum, 10 Ethereum, 1,000 Ethereum, 100 Ethereum. And if you click the little red text at the bottom, it'll show you your slippage. And you can see if you put 1,000 Ethereum in there, which is about $150,000, your slippage is only 4%. Because we have an automated market maker in hexdex.win, which is also open source and audited and amazing, and has $8 million liquidity for Hex. So it's not like with these one of liquid fantasy coins where you can't get out. If you try and get out, you crash the market and you get nothing in return. And Hex, the automated market maker, when someone exchanges Ethereum for Hex there, or any ERC20 or any stable coin, right? USDC, you can get at Coinbase with no fees and turn it into Hex on hexdex.win. Or you can mint your own coins. These are free to claim if you're a Bitcoin holder. If you had Bitcoin on December 1st, 2019, you can get Hex for free. We also have a referral program. You pay 20% on top of someone's entire stack, which is amazing. The people that click the link get a 10% bonus for using your link. So they want to click it. The price of Hex on the distributed exchange goes up by the square of the money that's put in. So right now there's about $4 million of bid support. If you put in $4 million, the price would go up 4-fold. If you put in $12 million, the price would go up 9-fold. If you put in $16 million, the price would go up 16x. Now that would be in a single trade. If other people sell into you, you'll have some drawdown. Now here's the interesting thing. On a normal order book at a normal exchange, when a buyer and a seller meet, they leave. And there's no record or history that it happened except a little blip in the price and a little blip in the volume bar. And that's it. In hexdex.win, when you put your Ethereum in and you take hex out, your Ethereum stays there and acts as bid support. And so it's very hard to get scam wicks, and it's very hard to push the price down because the average amount of time that people are locking up their coins is 1,200 days. People buy it, they lock it, and now they can't sell it. It's amazing. It is the absolute best thing going on in crypto, and the price shows that. I don't know how many minutes I've been on here.
15 seconds.
Go to pumpamentals.com if you want a 10% bonus. If you want to mint your own coins, you can transform Ethereum into Hex directly. You can claim it for free if you're a Bitcoin holder. You go to hexdex.win and transform hundreds of different things into Hex. We got 20,500 people in the chat room, t.me/hex crypto. I've got 100,000 followers across YouTube and Twitter, twitter.com/RichardHartWin and youtube.com/RichardHart.
Thank you very much. Thank you. I'd like to ask our second participant, Kostya Du from PayMob, to please join us.
Hello. Hi, guys.
Hi, you have 5 minutes.
Thank you, Elena. Just following the talk about combating the coronavirus, just wanted to let you know we're not doing nothing. Last week, we applied to Innovate UK Government Grant Fund with our solution to empower courier services and delivery services to well balance their delivery power and combine different delivery services on our card machines. And also we want to go to cashless support way and make every courier to be able to accept contactless card payments with our machines. But now let me show you my main pitch deck and explain what we've got and how it works for PayMob. Today, I'll tell you about our PayMob company. We're based in the UK. We've got regulated and authorized by Financial Conduct Authority recently, just 2 weeks ago, as a payment institution. And today, I've got two solutions. Smart point of sale device. It's a similar card machine, but with added value. And also I'll show you something, how can we just convert any Android smartphone into a contactless payment machine. Today, we are resolving a problem that when a card physically presented, merchant fees are quite overpriced. And we want to resolve this issue. And I'm talking about really big market, about almost a trillion pound market only in the UK, but we operate around the globe because we have a subsidiary in Dubai and in Ghana, Africa. How we decided to do it, we have developed a very heavy back end behind our payment interfaces. And our key advantage of our solution is like a multi-banking. It means that every single payment interface, like a machine or an application, could be connected to as many payment systems as we wish, like Visa, MasterCard, Alipay, WeChat, American Express, etc., etc., etc. And by going this way, we are aiming to connect a merchant, a single machine, to as many real acquirers as possible and providing a cheapest rate by adding our tiny markup. Today, we've got this machine. Let me just stop sharing my screen and I'll show you a real example how does it work. So we've got this machine and it's up and running and we are already generating some revenue and profit. We sell this machine, but it's not a card machine you use to pay by your card. It's like an added value services for the merchant who uses, because the merchant could sell insurance or remittances services like Western Union cash in and cash outs to generate additional revenue. But the most exciting from my personal point of view is an application, just Android One, when we could turn any Android smartphone into a contactless terminal to accept card payments or wearable devices or even iPhone. Let me just show it because it's live and running. So I'm going to charge myself by $18, and it's as easy as to tap your card just behind the machine. And yeah, we've just performed a payment. This payment we're going to use to revolutionize small payments, like for barbers, for plumbers, and for street food sellers, etc., etc. That's what we've got as a solution, and with this we're going to revolutionize the whole payment industry in related to on-land payments when a card physically presented. By the way, this is my real UK bank card, and this is like real working solution. Today, as a company, we are looking for about £2 million investment to lift up our license in the UK, to remove limits and to passport services across Europe. Thank you.
Thank you very much, Costa. And our next participant is Jonathan Ruiz Gomez from NBC. Hello, Jonathan.
Hello, good
Hi, you have
evening.
5 minutes.
Okay, thank you. Good evening to everyone. I'm Jonathan Ruiz. We are Metro Acesa, the biggest real estate developer in Spain. We have over 100 years of experience in the history. We are currently having over 100 new developments in Spain, mainly focused in primary cities and top touristic areas. One of our highlights today is that recently Carlos Slim, one of the richest investor worldwide, has increased his shares in our company. So actually, when we take a look on the traditional system of buying real estate assets, we realize that there are many different layers, different players that are facing a full analog process. We are lacking of transparency in this process, and all of them are taking a portion of the business, a commission fee. Actually, from the innovation department of Metro Acesa, we strongly believe that blockchain will bring an added value in this process by digitalization, cost and time savings, and increasing a customer relation improvement, and having on top a new distribution channel with a new business model. So actually, Metro Acesa has developed a platform with Grant Thornton for the sale and management of real estate assets. This is a worldwide project that actually is leading to investment funds, family offices, and crowdfunding. How do we do it? Is from one side, we put the developments, the new developments, we take on the other side the investors, and we try to make an easy ALM and KYC check protocol, and having a purchase agreement. Everything will be binded to the Ethereum technology, into the blockchain. And actually, something really great that we bring is a full transparency in terms of the construction itself. We define milestone that everything will be given as a way and milestone to the clients, to the investors, to see at any time the progress of the new development. We remove the third parties, but we guarantee the success having the big players, overall Autodesk, Amazon Web Services, and the smart contracts granted by Grant Thornton. So actually the investor will receive his tokens into the wallet they decide. The tokens will include all the attributes from the process explained previously. And if we take a look on the competition, if we see and we check the commercial side, for example, the realtors, such kind of Remax or Century 21, they don't want to believe in these technologies because otherwise they will remove their commercial fees. If we take a look on the competitors just next to us, they are far away behind from the blockchain technology. And what about the prop techs, which are startups and so on? They have a common factor, which is all of them are quite new in the market and the business. They don't have deep, real understanding of real estate and regulation. And actually, they are as well a third party. So therefore, they have the aim of gaining a fee. So actually, we are looking for international partners, which will help us to reach international investors. But our main aim is we are looking for investors willing to buy real estate assets from our side. Why now? Actually, as you may know, the crisis of COVID-19 is creating a really volatile stock market, and therefore the real estate assets is really stable. And by us removing all the third parties, the profitability becomes higher. We are running out of a successful use case last year, which brought a new development on success in crowdfunding area. And now we are looking into the globalization of our platform. So what do I bring you today? It's a real estate investment opportunity, already 100% finished. This is a 5 minutes from the sea coast in the south of Spain. It has their own golf course. Near to that development is the biggest geoda in the world that it's open to visit since September last year. Actually, if you see the bottom right picture, you see the size of a human being compared to the geoda. And actually, by investing in us, you are not just getting tokens, you are getting real properties that you can enjoy. Otherwise, we take care of the property management. In case that you are not enjoying in the time, we take care of real estate for rental and the maintenance. The property starts from 115K, and actually we want to give the opportunity for having tokenized 50 properties from this new development for the next 2 months. We ensure fast AML check for investors. A high value investor will get greater benefits, and actually the high value will be increased by having 25 properties sold or even 50. Actually, just to highlight, we have dozens of team members involved, but to say one, we have Grant Thornton, over 50,000 people worldwide, over 140 countries present, and actually Carmen Chicharro, Commercial Marketing and Innovation Director, taking care of the space in Metro Bacesa. So in case that you are thinking of placing investment in real estate assets, please contact us. Thank you.
Thank you very much, Jonathan. So this is it for today. I'd like to ask our judges to please save your evaluation forms so I can get your results. And I would like to ask Emilia Gonzalez to be the first and to share your feedback with the audience and with the projects, please.
Sure. Thank you so much. We have 2 or 3 minutes. So the first thing was that the team, I don't think I heard, I think the third team did a good job, but I think the first and the second teams did not introduce themselves. You know, who are you? Why are you the best person for this startup or this project or whatever you want to call it? And so I think that's one big piece of feedback is I think every time you pitch, it's really important to kind of introduce yourself, kind of what your background is, and why you think you're the best team to execute the project. And so that's kind of one big piece of feedback. I think team 3 did that at the end, which was really good. So I can go one by one. Team 1, I think I feel your passion. I think I can see and sense how much you believe in it. But I didn't get much information about, are you fundraising money? Are you looking for people? Like what are your asks and what are your needs? And then 2, again, they're the team. I have no idea who you are. And so that's one thing that maybe I would focus on is kind of the pitch. You've probably done this a million times, but also kind of refine it a little bit better so that you encompass kind of all the different things. When I ask for, I judge a lot of different pitch competitions, and what I ask for is to have the business idea, the business model, your kind of projections, the technology, and the team. And I think those are kind of the 5 things, as long as you encompass those 5 things. And then sometimes competition, if it's something that a lot of people are working on, you know, what is your competitive advantage that I ask for in all the teams. Team 2, I think that you did a good idea. I like that you had a little demo to be able to show the device. And so I thought that was strong. I think for me, it was still a bit unknown about what the business model there was. Maybe you said, but maybe it just didn't come across completely. And then team 3, I think y'all did probably the best job in terms of kind of having a cohesive pitch, kind of having a beginning, middle, end, addressing the different points. I think you kind of addressed it, but the biggest need in the system and ecosystem, I am still kind of unsure about this. And, you know, especially given the circumstances given now, you said that they're investing in this kind of investing in like real estate is something that is more stable relative to kind of other forms of investments. But then I would take that a little bit step forward and kind of really nail down, you know, why is this the best use of my money, and why you think that you know, I can get the returns that I want, or I can get the needs or desires of, you know, that this is the best use of my capital. So those are my 3 points. Thank you all so much. I do have to step out, but I wish you all the best of luck.
Thank you very much, Emilia. Thank you. Can I ask Tony Evans, please share your feedback?
At least I remember to put it off mute this time. Okay. Nice pitches by different people. I'll do the same thing, just going through all the 3 pitches. I thought the last pitch in regards to property was probably the strongest one in regards of there was an actual reason, a history of the, what is needed, but then the only part where I lost was how much was needed and what was exactly desire of it. Okay. The second one I thought was an interesting one, the demo and stuff like that. I like that you put down the amount of money, and would be interested in knowing a bit more about that project. The first one, passion, I have to say, the passion of that was just wonderful. But I just don't know what was the goal, what was needed. Okay. For me, I was just like, I like it very simple. I always tell my people, just my pitches, just speak to me as you would to a 5-year-old child. Tell me exactly what is the proposition and what do you want. That is it. And also the last part is, how do I get my money out? Okay. And what is your exit strategy? Everybody always asks about what is the opportunity, but nobody ever tells us exactly what's the exit strategy or what that is. But it was 3 good pitches, very interesting, and be interested in talking a bit more as well. So.
Okay, thank you very much. I'd like to ask Harjoat Bhamra to please share your feedback.
Okay, yeah. So very interesting pitches. So there's, I guess, so I'll start with, I guess, with the first one, Richard Hart's pitch. So it's clear that Richard really believes in the project. It would have been, I would have liked to see, I guess, more information about the kind of, I guess, how much money, more, I guess, details of how much money he's looking for, some sense of projected outcomes over a time frame. So you get a sense of, if you invest, any idea how much you'll make and when. Of course, it will be very approximate. And I guess it's most fundamental, whenever you're thinking about a business, you want to think, well, which human need is being addressed by this, and whose problems are going to be solved. So more detail on that. I think a lot of these issues could be solved, I think, particularly in this Zoom format, by having a pitch deck. I think when you're actually with somebody person to person, you don't always need a pitch deck. But here, I think it probably would have helped me anyway. But so I think that with Richard is very, I guess, a very strong communicator. So meeting Richard in person, I think, yeah, I think things would go very well. But over Zoom, a pitch deck would really help. So I think, to some extent, I think Vijay says that this technology does mute your personality a little, and that applies to everybody. With the second, I think the second pitch, I understood that was the most easy for me to understand. That doesn't, but that's of course a reflects of, you know, how I understand things. So with the second one, I would like to have seen, so it was clear to me what the problem was, because we all have pay for stuff, and then we understand, okay, someone takes a cut, and let's reduce the cut that the payment technology provider takes. So that kind of was easy for me to understand. Again, it would have been nice to have more information on, you did mention the size of the market, but then you talk about, you know, to what extent do you think you'll penetrate that market? So how you know, after a number of years, what would your market share be? It would be nice to have a sense of that, because it's easier then to compute, have a sense of revenues and so on, and then on top of that, build projections. If I'm going to invest, what will I get out of it? And also in terms of competition, I'm guessing you aren't the only person who's thinking of this. I may be wrong, but sometimes if there is competition, it's sometimes just to mention it up front and then talk about how you dominate the competition. I think that's good. with the last pitch, with Jonathan Riz's pitch, there I guess I understood it less well than the payment technology pitch, but that's because the payment technology pitch is pretty straightforward, right? What's going on? So when it comes to real estate, it was good to have a sense of why would I want to invest in a business which helps real estate as opposed to many other things? So real estate returns can be very high, but real estate is also quite illiquid. And it would be nice to have you compare the kind of underlying investments with other investment classes, because clearly you must believe in real estate. So I want to tell us why you think that is more, I guess, better to invest in than other asset classes. And although I did get a clearer sense with your picture of numbers, and it would have been better to even see even more of that. Just another thing with just a very small point, when you're presenting, I don't think you should have resized your PDF so it fitted in the screen better, because then I would have been able to see your slides more clearly. Because you made these wonderful slides, but then there were some bits of them that I couldn't see, and that was a shame. Particularly in this Zoom format, it's important to see it. Overall, I think it was a good pitch, but I think where it lacked clarity was, why is real estate a good thing for us to get involved in? So overall, I think there are 3 very nice pitches, and in some sense, I guess the best overall pitch would have taken elements of all 3. You could combine them in terms of how they were done. Thank you very much.
Thank you very much. I'd like to ask Nick Ayton to share your feedback.
Yeah, I understood Richard's 100% because I guess really I follow Richard, and I know Richard's been at the centre of the blockchain crypto revolution for some time, and also I know the shortcomings of the current flavors out there, whether it's Bitcoin, whether it's Ethereum, and all the others. So I get what Richard's. I'm not entirely sure if he was just letting us know how it's launched and how it's performing. It seems to be doing pretty well, I have to say, and whether he actually needs money, I'm not sure. But I've had a look, and yeah, I'm probably gonna buy some Hex. I should reveal I also own a crypto exchange as well, and I've been in the crypto blockchain space for some time. So yeah, I quite like Hex, but I'm not sure what Richard's after, if anything. The second thing is payments. There is dozens, literally, I see dozens of payment propositions, whether on blockchain or whether not on blockchain. Some have point-of-sale terminals, some are sort of like a level of middleware. They all try and provide the user with more flexibility or consolidation of different payment rails and take the fees out. I wasn't entirely sure what was different about this. Clearly working products, quite impressive. But it's yeah, addressable market, huge, but there's a lot of competition, and I didn't hear, as the professor said, where they were different really. So tough space, very competitive space, payments at the moment. Now, if you have payments linked to a marketplace and you're bringing in other, if you like, other things, then it gets very interesting. Points and prizes, participation. Decentralized operating models do tend to scale at pace because they have this concept of not only transparency and trust, but they have this concept of rewarding everyone who participates in lots of different ways, and they generally scale really quickly. And I've also built several of these myself and got them funded, and yeah, it does work when you get it right. Property, again, I've seen probably 30, 40 property plays. There's a number of challenges with the property market. Again, as the professor says, it's illiquid. Putting stuff on the blockchain and tokenizing the underlying asset doesn't make it liquid. We work directly, our firm works directly with 7 large families, Middle East, East Coast, Germany, France, and Switzerland, primarily, and we are plugged into several, maybe 30, 40 others, and the cornerstone of their portfolios is always property. And they want to unload their property, and they want to get more liquidity from their property. And a lot of them have looked at blockchain propositions, and they're notoriously hard to get off the ground. So I think there's one I've seen, Everium or something in New York that does pretty well. Proppy, the founder's done a pretty good job of that, but still struggles to sort of get traction. So yeah, property, everyone is drawn to property, but tokenizing, whether it's the transaction or the underlying asset, and Ethereum is, let's face it, it's not a very good blockchain, to be honest, to do anything like this. As Richard will tell you, it's pretty poor. So yeah, it's really interesting. I get Hex, the payment thing, I wasn't sure why they were different, and the property thing, well, I just think it's a tough play to try and work a blockchain proposition in this market using blockchain.
Thank you, Nick. We have Darwin Ling with us. Darwin, could you please share your feedback?
Yeah, so I think a lot of the judges gave really relevant feedback. I share really a lot of them. I'm not quite sure sort of the context for this particular pitch, any kind of central theme, but I think kind of come out with there might be some payment, there's actually some crypto, and then at the end is the kind of like a blockchain. So so that's sort of like, I'm not quite sure. So that might kind of have some little bit confusion for me, just to, and by the way, again, I want to apologize, I came in late, so I wasn't aware of some of the context of the discussion. So let's just go through the sort of like the first one here. Again, thanks, Richard. I think I'm learning as you speak. You mentioned your website. I immediately looked at your website, impressive metrics and all that. Obviously, you're probably not pitching for money here. So I think you already got your off the ground, you already have a trading platform going on. So kudos to you. But I think, I think the same feedback is that it will be nice to have like a kind of like a little pitch deck when you speak, because that's actually will be helpful. So I'm using your website as your pitch deck as you speak. So that would be good. We'd love to connect afterwards. Actually, that might be helpful. For the second one, which is the payment solution, again, it's a the minute I see that, that just like, saw a lot of competitors, not just a small one, the big ones too. You're talking about, of course, the big player, like, this, not necessarily the credit card itself, but more so like the Samsung Pay, the Apple Pay, where because you're using this very similar technology. I'm sure you have your differentiation, but that doesn't come across very clearly. And then, as an investor, I'm already preoccupied, or actually being biased, is that these guys are competing with all these large players. So you need to be very front and center as at how you're different than these leaders here. And the problem is the idea where you're going to cut the merchant fees and all that, because that's exactly what the 50 plus other players are doing, trying to cut the merchant fees. How you different other than that? So that's also need to be very clear. And also the market, where are you focusing? I mean, it looks like you're focusing more on the European market. Is that the case? So that doesn't come out very clearly also. So if you can kind of talk about that a little bit more, I think that would be helpful, at least for my understanding. And finally, for the third platform also, for the tokenization, again, real estate tokenization has been kind of like day one, that when the whole ICO movement and tokenization movement that are coming out, real estate is the #1 platform that everybody's targeting at. Again, I didn't see the differentiation, and I'm sure you have a list of your competitors. In this case, the good thing is these competitors are not already well known. If you're not in the industry, you're not following very closely, then probably it won't make any difference. Hang on. But the idea is really, again, really need to be honing your pitch. The first slide, in your pitch should be say, we are the tokenization platform, real estate, and how you're different than the 10 other offerings right there, or potentially what type of market that you're looking at. You know, are you looking at commercial buildings, or maybe it doesn't matter, or is it like residential homes? What are those real estate focuses that you're focusing? And again, geographical focuses. Are you trying to launch this platform, in Europe or in US or Asia or whatnot? So kind of give a clear sense of where things are. That would be very helpful for investors. So I think that's it for me.
Thank you, Darwin. So we have the scores from all the judges, and our winner for today is Richard Hirth from Hex. Congratulations, Richard. Would you like to say something?
Yeah, thanks, guys. I mean, it's not a fair competition. I mean, it's just primarily a startup platform with startup judges, and everyone's looking for normal startup things like competition and runway and how much money do you need. And Hex doesn't need any money. It's already built and successful. And other things like judging the founders and judging the team, that's really, really important for things that are securities, where you invest your money into a common pool with the expectation of profit solely from the work of others. And Hex is the opposite of that. So we do not promise you any expectations whatsoever. If the price continues to appreciate as it has 11x in 90 days, with $8 million of liquidity on chain that you could sell right into instantly, fully liquid, no sign up, no AML, no KYC, on chain, trustless, audited, the way crypto is supposed to be done, no pause switch, no humans. It's amazing. It's just totally different than a startup, right? So you're buying a complete, finished, world-changing technology that has no competitors. We're the only thing in the world in the blockchain that allows you to monetize time the way they do in the banking system. You lock your funds for longer, you get paid more. You lock your funds for larger, jumbo CD, you get paid more. We just took something that's the most successful product at the bank at the real world, and we put it digital on the blockchain. And we made it trustless, and we audited it, and we put all of these hooks and game theory and marketing into it so that we could get the same onboarding of users that all the scams get. Scams get tons of users onboarded into things that they lose all their money on. And so we adopt those same tactics that are successful and viral, which is why we have so many websites without any centralization whatsoever popping up, building on top of Hex. So we've got the best statistics in all of crypto. I mean, we've got $1.5 billion of Bitcoin holders that have free claimed their Hex, and that's provably cryptographically verifiable. $1.5 billion of Bitcoin holders have claimed their Hex already. That's amazing. I mean, so it's not a fair competition. Like we're not a startup, and those guys are startups, I appreciate the win anyway. I appreciate the win. Look, if we're here to serve the people, I believe everyone that's watching wants to make an ROI. They want to make a return on their investment. I think that this is the best thing that you're going to see maybe for the rest of your lifetime. It's that good. And it's working, and the metrics are there. And that's the stuff that you can't fake. That's the real stuff.
Thank you, Richard. And thanks to our speakers and judges, and thanks to our online audience for being with us today. I'd like to invite Valentin Preobrazhensky, CEO of LaToken, for closing remarks.
Helena, thank you. Thank you, everybody, for joining our discussion. I encourage you to think what kind of insights could be shared online in our next sessions, in our discussions, interviews, panels, and you are welcome to bring top experts there. Thanks again for joining us, and see you sometime soon. Thank you, guys. Good luck.
Thank you.